What's up, YouTube? It's your host here, Miles on the Money. In today's video, I'm talking a little bit about ETFs. Which one is in specifically? Well, this is something I hold in my retirement account. If you clicked on this video, you might have watched the video where I explained the Roth IRA, and this is what I have invested in mine and in my taxable brokerage account. I think it's good to have two different accounts, one Roth IRA and definitely a taxable brokerage account, because the Roth IRA gives you benefits that are in the future, right? But the taxable brokerage account, hey, you don't have to worry about withdrawal penalties. Obviously, when you sell that asset, you're going to have to pay capital gains tax on that. But still, it's not like, oh, you took it out of your retirement account before you turn 59 and a half. I would like to believe that's a big difference. So, and plus the retirement account, Roth IRA, you cannot borrow against those assets like I can, or you could with a taxable brokerage account. So let's go ahead and get to it, guys. What am I investing in, or what have I been investing in? Because I had to pivot in the market. And actually, if you're new to the channel, hit the like and subscribe button. If you like these type of videos, and actually you could have been watching me over and over again, hit the like and subscribe button. Hit that bell notification icon to get notified about all posts, baby. We're here to stay. We're here for the long term, and building wealth is what we're doing. We're not going to just waste all our money. We're going to invest. There's people doing well in this economy. So, hey, if you can do good and decent in this economy currently, imagine when the economy is doing really good. You'll be in a great position. So what was I investing in before? I'd say VOO, SFY is what I was investing in before. But I sold all those assets. I did. And I put it in something else instead. What did you put it in, Miles? Well, Miles on the Money, I found a stock, which is actually ETF, which gives you good gains, great growth, but it doesn't limit you and give you that extremely high risk like an individual stock would. You know how the individual stock, let's say Apple for example, if there's some China news going on with US beefing in China, that would pretty much hurt them most of the time. I won't say all the time, but most of the time, and the stock prices shoot down. Well, like I've showed you in later videos, individual stocks are way more volatile than ETFs, which there's pros and cons to that. They can shoot up in XXX and do all of that, and they can also do the same thing to the downward direction. So that's up to you to decide what investment is best for you. For me personally, I would rather prefer ETFs, mostly, at least as the foundation, so I don't have to keep checking my account. That's a constant stress. That's not investing, guys. That is not investing. If you have to constantly detect that because you're worried, oh, I might lose it all. First of all, don't risk more than you're okay with losing. And second of all, do your research on these companies and learn about these companies. So, hey, one of my favorite investments right now that hasn't been getting much love until like 72 hours was SoFi. They're down currently, I want to say 30% on the year, or 20% maybe with how they've been going up recently. And I'm still trying to buy the stock. I'm still buying the stock. Mentally, I'm like, oh, it's red. But at the same time, what did I tell you guys? We want to buy on red days. Those are the days you buy. Just like when those new Jordan or those new iPhones come out, you guys buy them as soon as they come out. They hike the price up, you still buy them. You're not trying to get them at a discount, most of you. Some of you maybe, but you got to look at it the same way with the stocks. Except buy it when they're on sale. Just like how you try to get Black Friday sale. Maybe that's when you get the iPhone, or maybe that's when you get these certain products. Black Friday. So red days are pretty much like Black Friday. See it as that. That's how I'm seeing it now. I'm shifting my mindset. Now, what is the ETF that I've been investing in? I'll get to that in just one moment. So I've been investing in VOO, SPY. VOO is pretty much the same thing as SPY. And I'm sorry, it was SFY that I've been investing in also. But I did sell that also. I didn't think it got enough volume for me personally, but it's up now. So I was sleeping on it myself. SPY, which is the top 500 of SPY, which is the top 500 companies in the US stock market, is currently up basically 11%. It's 10.93%. We're just going to round that up to 11%. It's up 11% just year to date, just in 5 months. Tell me where you guys can get 11% on your money in 5 months. Let me know. I'll wait. No? Okay, I didn't think so. But I got one for it. I'll give you that after I give you the stats of this one. And for a full year, not year to date, but a whole year, 365 days, right? That's what a year is. We look at here, it's up 27.5%. That is great. But that's not the best of them all, is what I'm here to tell you. The best of them, one of the best of them, in my personal opinion, again, this is Miles' opinion, Miles on the Money's opinion, you don't have to go run and buy the stock. I actually would like it if you didn't run and buy the stock just because I mentioned it. Please do your research. So the best one, in my opinion, is SPMO. Heard about it a few times. I didn't really look into it, but I did some research on it, and it looks like it will double what the S&P 500 does. So S&P 500 did, I rounded it up, it was 10.93% to 11%, I rounded it up. Look at SPMO, just 5 months, right? Year to date, we're 5 months in, and it's up 26%. That's double. That's literally double. So you thought 10% was great on your money, which is good, which is very good, but look at 26%. And you're not as susceptible to the huge downside with the volatility like the individual stock. That's a big pro about it. But guys, that's just year to date. Let me give you a full year, 365 days for SPMO. They are currently up 41.5%, while the S&P was up 27.5%. This one is up 41.5%. It's going to do more than the S&P 500 is what I'm here to tell you. It's not going to underperform it. It overperforms it. So just think about it. If you had put $10,000 in SPMO a year ago, you would have gained. So not only would your $10,000 gain value, but it would have gained value where you would be up 4,100. You would have gained. So not only would your $10,000 gain value, but it would have gained value where you would be up 4,100. That's huge. And obviously, the more money you have, the bigger the gains, right? So one of the best opportunities I saw, which was to buy this company, I wish I did buy more, was actually near, I think the president called it Liberation Day, which we joke around and say, liberate you from your money day. But no, that was around late March, early April. That's the lowest the market was at from the beginning of this year. So if you bought down there, you're up even more than that, which is at least year to date wise, amazing. So you guys let me know what you think about SPMO. Is that something you're considering investing, or do you guys know one that is a sleeper that you see people sleeping on and maybe you want me to talk about it? Leave me a comment in the comment section. I'll catch you guys in the next one. It's your host Miles with Miles on the Money. I'm out here. Guys, have a great day. Peace out.